Okay, just clicking around here for a second, make sure we're live. All right, I think we're good to go. So welcome everybody to just a live chat today. If you're a usual follower of the podcast, you will know that what we typically do is we'll do a few segments, typically volatility, options, tactical investing, strategy building, all that stuff. We'll do that in the first half. I'll prepare some things. And then in the second half, we always do a live Q&A where people can just ask questions in the chat. There's also an area on the YouTube channel in the community tab. You can submit questions ahead of time. And I will typically get to those, and I'll sit around for, sometimes 45 minutes to an hour just answering the chat questions. But I had the idea recently that I'm wondering, and I won't know until I actually run this experiment, so, this is happening today, but I'm just curious how many people are interested in maybe only doing the podcast version, not sticking around for the live chat, or vice versa, maybe only the chat. So just for a few weeks, I am going to split them up, and we will see how it goes. So please feel free to give me your feedback. Of course, email me if you're in the VTS community. Absolutely do that. And I will see. Maybe we'll go back to the old style if people think, let's just do them both at the same time. Or maybe people want it divided up and we'll just do two of these every week. So thank you very much, everybody, for tuning in. Today is, of course, just a chat, so feel free to start asking questions in the chat section. I don't know how many people are going to show up, of course. I'm doing it at a little bit of a strange time, and I have to be honest here. I'm quite tired. I didn't really think this through very well, but I'm currently in Taiwan right now, which means the market's open here for me at 9:30 at night. And with daylight savings time, it'll be 10:30 at night. So I typically go to sleep at roughly 3 in the morning when I'm in Taiwan, 2 or 3 in the morning, and I'll just get up at 10 or 11 in the morning, and that's fine. That's my day. I live in Dubai for a good chunk of the year. When I'm in Dubai, markets open around dinner time, so I typically go to bed about midnight, wake up at 8 in the morning. When I'm in Vancouver, markets open at 6:30 in the morning, so I'm up at 4. It's different wherever I am in the world, but right now I'm in Taiwan, and I actually only slept for a couple hours last night. So strong coffee. I'm going to try to focus. Hopefully there's some good questions here. And let's get started. Ask me anything you like. So, of course, typically my live streams, we are talking about volatility trading, volatility ETFs, like everybody's favorite UVXY VXX, VIX futures. Ask any options related questions, no problem. And of course, tactical investing, things like that. And if you get really bored, go ahead and ask me personal questions as well. I answer everything. So if you feel like trying to put me on the spot, you just fire away. I'll try not to embarrass myself. Okay, so I don't know how I'm going to do this. I'm going to start with the chat. There are 3, I believe, prepared questions I can get to if we find that there just isn't a whole lot of people here tonight. Don't know what you're doing on your Sunday evenings, but let's see. So I'm going to start here, and then perhaps if it slows down, I will get to the other ones. So I'm a new VTS member. Welcome. Is the volatility barometer using only the other metrics you have in the email, or are there other proprietary factors? All right. Good question. So let me fire off a screen share. I'll just go to our most recent email. This was from last Friday. And the question is essentially the volatility barometer. This is my own proprietary volatility index that I created. It's essentially all of what I deem the top most robust volatility metrics all combined into one single index. So I can get just a very good snapshot of where market volatility is as a whole. Of course, the VIX index itself is a terrible metric. If you follow my work, you will know that we talk about that a lot. It's hyper-specific. It doesn't track well. There's plenty of areas of the market that it skips. VIX futures are great, but again, it's specific only to VIX futures. We look at things like, the volatility risk premium, for example, also a good metric, but it doesn't, it's not all-encompassing. So I've essentially combined as much of the information that I feel is most relevant into the volatility barometer. So the question is, this is every daily email. I calculate all these things for everybody, how much the volatility ETPs will decay long-term, 1 day, 5 day, 21 day, unless, for people who are targeting their option trades for weekly, monthly. But the volatility barometer does include a few other metrics that are not included here, some more specialty metrics, I would call them, and several of these are not included. So these are just things that I thought, as far as an email goes, for the VTS community in general, what they would be interested in following. But for example, the VVIX is not in my volatility barometer. The VIX index is probably 2%, if that. The volley, not in there. Things like that. The long crossover, for example, fast, medium, slow, they're all in there, but the medium crossover is probably the most heavily skewed. Things like that. The M4 to M7 is in there, but front month futures are slightly higher. I have my own way of calculating this, so it is the absolute best measure of volatility for me and what I do. But what I share in the email is what I feel a lot of you might want to start use in your trading, right? So there is a little bit of crossover, but there are also things that are omitted. I have to actually be a little bit careful. I do like to share as much as possible with the community, of course, in my emails, but you have to understand that I don't want people to log in every day, because I've been sending an email every day for over 11 years now. I don't want people to be hit with a wall of numbers. There's some of you in the community will absolutely love that. You're, data geeks just like me. You love crunching numbers and spreadsheets. But there are a lot of other people that'll see that and it's just a complete turnoff. So I have to be very specific on what I attempt to include, and a few things that I avoid just out of sheer complexity. But just to give you a general idea, some of them are in there, some of them aren't. But feel free to email me and I'll give a little bit more details. But in general, I try to keep it so trying to please the most number of people if possible. And again, it's just a guess on my end, so always give feedback. If you feel like you're missing something, or hey, I don't like looking at your email, it's too much information, always give feedback. I will be happy to entertain any changes. Okay, new to the community. Again, thank you. How do you pick your VXX butterfly strikes? So let's just go to the one we have open right now. That's always the best way to go. So we only have one live trade open right now. Typically, we have room for two in this strategy. So just for anybody new, I will scroll down to these are all the trades, by the way. If anybody's really new, you won't know this, but my portfolio is 5 independent strategies, all with a 20% allocation. So we've got ETF strategies, one of them that includes a long vol potential position. This is the butterfly strategy for VXX. It's essentially a short volatility strategy with very little upside risk. And then, of course, we've got the iron condors. So we closed one out here, and we've only got one open, and this is what it looks like. So the question is, how do I choose the strikes? Well, essentially, what we are doing with this strategy, and this is a super basic version, but what we are doing, because we do know that the volatility ETPs trend downward over time, right? This is the VXX. Of course, same thing applies to the UVXY. This is the UVXY since it launched live. We know these things decay long term, right? This is not a surprise. But what we do also know is that they suffer sometimes short-term massive spikes, and that's what traders need to try to avoid. It's not making consistent profit that is the problem with the short volatility trade. Basically, markets trend upwards and volatility products trend downwards. So there's plenty of periods where just out of pure dumb luck, you would be making money. The key is to try to manage the risk. That's where people always fall short. So what we do with our butterflies is we are still leading the trade, right? We are still, when we opened this trade, the VXX has decayed actually quite a bit since we opened this trade, but it was all the way over here when I opened the trade initially, because I do know that it's going to trend downward over time most of the time. And then when it spikes up really high, unexpectedly, nobody can time those volatility spikes. I'm not on the hook for any losses because I've chosen a very good structure. I've chosen the broken wing butterfly, essentially, where I am just trying to lead the VXX downward. And sometimes we use the UVXY as well. It is basically my job to understand decay factors and how much realistic expectations. So for example, in the daily email, we do have what's called the volatility crush dashboard, where the VXX right now, it is right now currently based on where VIX futures are and the VX30 to VIX roll yield, it is decaying 0.55% per day. So if you're targeting a 2-week trade, I have to actually know how far in advance I'm going to be targeting the decay factor. So I have to set up a trade, try to catch it in the middle, the old Wayne Gretzky thing, skate to where the puck is going to be, not where the puck currently is. And that's what I'm trying to do. So sometimes it goes too far, sometimes it doesn't go far enough, but long term, I churn a lot of these, just constantly rolling them, and it's a very profitable strategy. But for example, if we were going to choose a new one, right, I can't choose the same strikes. So here's 19 days in advance. Well, it's at 40. I would expect that 2 weeks from now, if it just decays at its normal rate, you might see something 38, 39, right? So you could set up your butterfly that it looks something more like this. You would set up a, let's say, 39, 42, 36. Let's see what this looks like. First of all, so this is your standard butterfly. Here's the current price right there. That's not a whole lot of decay factor. And the risk over here is the same as the risk over here. So what you would want to do, first of all, is break the wing. So let's go 41 and let's see what this looks like. Now I have far less risk on the dangerous side. Remember down here, this is not a problem because I always have allocation to net long equities during stable markets. We will be in the 2 times NASDAQ, we'll be in the 2 times Dow Jones, and probably in the 2 times SPY as well. So no problem at all if it decays too far. We're going to make plenty of money in that case. We're really only worried about volatility spikes. So I want to make sure that the risk over here is very little, if any. But what you could do if you felt like it was going to decay further, for example, you could just go a strike upwards. You could do the 42, 40, 37, right? And this is the process that you would go through. You're trying to decide, oh, sorry, I went closer there. But you get the point. You're trying to decide where you think, based on volatility decay factor, sorry, I'm scrolling a little bit here. I got to try to avoid that. Based on where you think the volatility ETPs are going to be 2 weeks from now, with a nice comfortable margin for error, I am choosing the strikes that I feel are going to give the highest probability of being where the puck is going to be 2 weeks from now. That's essentially how the strategy works. And of course, this is trading. You don't always nail it perfectly. There are plenty of times when the VXX decays a ton. It's also not an exact proxy for the stock market. A lot of people think that, oh, long stocks, short vol, it's kind of an inverse of each other. That's not true either. There are plenty of times where stocks will be flat and volatility products decay. There are other times when stocks might be down and volatility products, you'd think they'd go up, they don't, or maybe they go up more. The correlation there is roughly 70%, but there's really no causation. We're talking about VIX futures compared to the S&P 500. So I just have to decide based on volatility only, not my opinions of the stock market, just volatility, where it's going to be 2 weeks from now. And I give it a shot. So that's how that works. Okay. I bet any amount of money that this LARP doesn't know what volatility is and makes zero from trading, only makes money by scamming people who don't know anything. You could be right. What I would suggest you do is stick around, stay tuned for a few of our live streams. I don't think it'll take you very long to realize that that's an incorrect assessment, but I don't blame you for thinking that. Of course, I am the person that is always talking about the just the vast number of scammers and people who claim to be traders online that aren't actually traders. So, don't worry, I have thick skin. You can say whatever you want to me. It doesn't matter. Nobody gets blocked. Everybody's invited, even people who want to be haters. But what I would say is just stick around. Watch a few of my videos. I've got 200 videos or something on the YouTube channel, hundreds of articles on the website. I don't think it'll take you very long to realize that that's not true. But yes, of course, you are entitled to your opinion. How do you get your options data? All right, so I've done a few videos recently. How do you get my options data? Well, what data are you talking about? Because all I really use for my options trading, remember, we are basically volatility targeting, right? That's what I would call, in general, what we are doing. So my options trades that we have, for example, the volatility trend that I just went over, the VXX broken wing butterflies, but also the iron condor strategy, I only need volatility specific data to make these trades work for me. So for example, we do have a couple of iron condors live right now in the portfolio. So we've got this one for gold, right? So here's today's price. This was opened a little while ago. This is one of the trades we have open. And then we've also got an IWM trade. So the price currently right there. Those trades are essentially right there. You can see the gold and the IWM. All I need for these things to work is an understanding of volatility metrics and an understanding of how those two strategies fit in with the other three, right? I do trade them independent of one another, but I also do have to be aware of not getting too exposed to a certain market direction. So for me, to answer your question, the only data that I need is my VIX futures, my cash VIX term structure, my volatility risk premium things like the implied and historical volatility, all the basic things that we talk about and that I show in my email, that's what I'm doing. And then I don't actually import it based on live trading because I don't like when my spreadsheets break. Oftentimes, if you make one mistake, it kind of sucks. But also, I actually did a short recently, a YouTube short, where I was talking about old school methods. And one of them is I do everything manually. So I will actually, in the morning, after the market's open, about an hour after the market's open, I will input all of my data in my spreadsheet. Let's see if I have an old one. This is not my data spreadsheet, but I very likely have some data here to give you an example. So what I will do is I will essentially let's just assume it's October 21st, 2011, right? An hour after the market's open, I will just go across the page and I will input manually all of this data going up to roughly, and then these are just ETFs and stuff, but I input those as well. But essentially all the volatility data is what I'm doing. And then from there, I like to do it manually so that I actually see it every single day. If it's imported automatically, you're not going to see those numbers go into your spreadsheet. So you're not going to notice any of the correlations. You're not going to notice any odd relationships here and there. But because I do everything manually every single day, I just get a coffee, go through the process. It's about a half an hour to input all the data. But that means that I am hyper aware of what's going on in the market. And I'm always seeing every volatility metric that's going into my spreadsheet because I put it in there. And so very few things get past me that way. I'm not surprised by anything because I'm seeing it all happen live. And I always have a little note, not physically with paper, of course, but I'll take notes. I'll notice things going on. Hey, circle back to that. Maybe, after dinner, I need to inspect that number before tomorrow's email. It looked a little weird, things like that. So manual input, volatility metrics only. And then I use the option strategies to represent my opinions of forward volatility, essentially. Okay. James Balapur. Aha. So you don't know. I do know facts, and he does I don't know what this means. Oh, I know what this means. Oh, you guys are fighting between each other. Oh, I get it. That was your name, Balapur. That's fine. You guys can argue amongst yourselves if you want. Yeah, this is, it's not common for us, to be honest. Our community is actually pretty solid, and I've done this for so long. Like I said, I've been doing this publicly with a live trading record on a public website for well over a decade. I've got over 1,000 articles and videos. I don't often get confused, or accused of things. But like I said, there is an enormous amount of scammers online. So when people lump me into one of them, I just assume that that's what everybody should do, isn't it? Like, you should just assume that everything you're reading online, unless you do further due diligence, always assume that the person is scamming, selling something, not really doing it behind the scenes. They're just, constructing something that looks cool for you on the front end. Always make that assumption. I go a step further, and I'm always reminding people, don't forget your favorite asset managers. They might have all the letters behind their name, but don't forget they're in the same boat as well. I'm in an industry that is sort of outside that, even though I've done all the certifications and I'm a fully certified portfolio manager. But people in my sort of subscription, in quotes, service, there's tons of scammers. So you have to assume that everybody you're listening to, unless you dig deeper, assume they're a scammer. But asset managers also assume the same. Don't forget that, what do we know? 85% of them underperform their benchmarks. So when you see somebody online on Twitter talking and it sounds really smart and talking about volatility metrics and it all sounds very clever, don't forget that they don't show you any performance. So you have to make the underlying assumption that statistically speaking, they're in the 85% that suck. They're not in the 15% that are beating their benchmarks. Always make that assumption that everything you're looking at online is constructed in a certain way to pull on your emotional strings and make you go a certain direction that makes them money. Always make that assumption. So this person, while you are completely wrong about me personally, this is an absolutely solid, starting point foundation. I wouldn't go through life speaking to people that way, just personally. But as far as the underlying assumption, I think you've basically nailed it. If this is your first live stream with me, yeah, you need to do more due diligence. You need to figure out, is this guy talking a scammer? Is this guy one of the other thousands of people out there in a sea of scammers? You need to figure that out. Like I said, give me a chance. If you do due diligence and you watch, say, 5 of my videos and you read 1 or 2 of my articles and you still think that that's true, hey, you do you. You don't need to come back, but you're always invited later on. It doesn't matter to me at all. But yes, great assumption to always assume that there is an ulterior motive to what everybody online is doing. Do your due diligence. Okay. Do you ever think of donating into longevity or other future tech? These kinds of So this is a good question because 100% of all of my money is in my portfolio, right? 100%. I'm a chef that eats his own cooking. Everything that I share, remember, I'm not doing this, constructing it in a way that, I think people will think this strategy is really cool or that one will get a lot of eyeballs. I only share in my emails what my own money is doing. And then it's an invitation for people to follow along if they choose. I don't pull any emotional strings. I've never done any advertising. I've never done any newsletter stuff. None of that. It's just me sharing. And this is all my money, aside from my volatility or my options trading. I have VTS options as well, but this is the VTS portfolio. I do a roughly 60-40. So say 60% is in this and 40% is in my pure option strategies that I've shared with everybody along the way. VIX options, earnings trades, the wheel of fun, things like this. So it's an interesting question, though, that you raise. I'll give you the answer. I do not invest any of my money outside of anything that you've seen in the emails. But there are times when I think, hey, maybe I could just put in a little investment into AI, for example. I mean, I'm a complete beginner when it comes to tech and data and stuff like that. I make my Excel work for me and it's fine. I'm not great, but I'm decent. But as far as I have no programming ability, I don't understand Python or R or any of these things. So investing in things like that, it's curious to me. What would I choose? AI, like you said, longevity stuff. I'm really interested in that stuff personally. I'm very interested in health and fitness. I'm getting very old, and I want to biohack and do all these things. So yeah, interested, say. But I have not yet deviated away. I would certainly share it if it happens. For example, as all of you know, I'm very negative on the crypto industry, for example. But I do own 2 Bitcoin. And I told everybody the day that I bought them, the price that I bought them, $24,500, if anybody's curious. I have 2 Bitcoins at $24,500. Yeah, I shared that. That's outside of VTS. But no, I have not done any other investments other than my tactical active trading. Not to say I wouldn't ever in the future, but as of now, no. I will absolutely share it with the community if I do. If I say, hey, I found this AI or an ETF that tracks certain things. I'm going to throw some money in there just if you're interested. I'd love to share that with everybody. But, as of now, no, I have not. Okay. More scammer stuff, which I like talking about because this is a major problem that, look, my friend Balapur if you follow my live streams, I don't think it'll take you very long to realize that we're on the same team on this one. So I think you're just having some type of knee-jerk reaction because this is your first time here. But I will entertain all of this, and you are always welcome back. You're all being scammed. It's so obvious. Well, okay, so here's another thing. And this is kind of one of those sort of intellectual or, experiment type things where, on the one hand, you could make a case that I'm so good that I have managed to scam people into paying me money every month for 11 years. I was talking about this in our last live stream. Actually, you can go watch the podcast. I think it was episode 58 or something. I was talking about this where, I don't share my subscriber count. I've never talked about income. I don't do the whole net worth bullshit. I don't make YouTube videos saying, here's what I think as a millionaire. I've never done any of that stupid stuff. You know how against that I am. But one of the things I am very proud of is that I have an enormous amount of subscribers that have been with me for many years. This isn't I basically call the subscription service for these traders out there. They're all, or not all, let's say 97%, just pull out a number out of thin air. 97% of them, just a made up number, are what I call revolving door services, where they do a whole lot of marketing and slick talk and everything sounds awesome. And getting people in the front door to pay you money for the first month, you'd be amazed at how many subscribers some of these people can actually get. But I call it the revolving door because what ends up happening is people join, they realize very quickly, well, this isn't at all like it was advertised, right? This guy was talking on Twitter like he's some genius trader. I'm looking at this information that comes with the subscription. This is, entry level stuff, or these trades are not even working at all. And I see this idiot talking about his big wins on Twitter, and here I am following his live trades in the email, and it's not working at all. So you do get a lot of what I call revolving door subscriptions. I don't do that. That's why I don't do the marketing. That's why I don't give people unrealistic expectations. That's why I'm always telling people that 12% a year forever is a fantastic rate of return. I'm not talking about, watch me make $6,000 on a YouTube video. None of that, because I don't want a revolving door service. I don't want a whole bunch of people coming in and then leaving 2 or 3 months later. People who find me for the right reasons. They typically do their due diligence. Most of the people are, adults and mature, and they don't do this whole young generation, he's a scammer and he's doing, my community's not like that. So we are not a revolving door service. But again, if people are being scammed, let's have a little bit of respect for other people's intelligence. If they are being scammed, they're adults. I think they would know. So maybe we should let other people make their own decisions in life rather than us labeling everybody like they're too stupid to know they're being scammed. That's a little derogatory. I think they're smart enough to know that they're not being scammed. And, this is a public live stream. It's going to be going out to my entire community. If you feel like you're being scammed, please unsubscribe. That would be completely idiotic to continue to pay somebody money when you think what they're giving you is a scam. That just doesn't make any sense to me. So I would assume that they're mature enough to know the difference. Okay, now it seems like you're going into actual questions. You don't pay capital gains tax. How does that work? I don't pay any taxes. I'm a Dubai resident, so I pay zero taxes of any kind. But I don't really share that on the side because I'm not a tax expert. We have members in the VTS community from, at last count, 68 different countries around the world. I cannot be a tax expert for everybody's country. I have no idea. I'm Canadian, but I do live in Dubai. So my situation doesn't really apply to anybody else. It wouldn't be helpful for me to break down my tax situation because it's quite literally that. But I have 2 videos on the YouTube channel recently that you might want to check out. One of them was talking about how the VTS portfolio can be followed in an IRA account. And the other one was a pretty detailed mathematical breakdown of the impact of capital gains tax on a person's portfolio. I'll actually even show it to you just so you can spot the screenshot when you see it. So if you go to my YouTube channel, I don't know if you've ever been there, you sound pretty new, but this one here active investing for an IRA, probably not interested in that. Just take my word for it. All we do is ETFs and we defined risk options. We don't do any naked short selling. So everything is IRA friendly, iron condors and whatnot. This one here, the capital gains can crush your investing portfolio. You can check it out if you want. It's fine. Or not. You can just hang out in the live stream and trash talk me. That is just fine with me as well. The one thing that you will notice, Balabor, as you get a little more mature in your life, you'll realize that the people that you're insulting, if they are actually successful people, what you say doesn't make a dent to their self-esteem. Like, it just doesn't even make any impact whatsoever. The only thing that ends up happening is you yourself end up looking a little bit foolish. That's all that happens. It reflects poorly on you, because if you're trying to, point to somebody and take them down, the only things that are ever insulting to a human being are things that are true. So if you just hurl insults, it's not going to impact the person you're insulting. They're just going to think, whoa, what's wrong with this guy? The people watching you do that are going to think, that's, it's going to reflect poorly on you. So it is entirely your choice to do that. But, math is too hard. I do have a math degree, if that matters to you. I did go to university. I did a double major in economics and math. I don't know if that helps clear that question up. Doesn't need to explain anything. So I'm going to stop with our buddy here, Balapur. But I will say you are welcome to continue watching my live streams. Like I said, it's not going to take you very long before you realize that I am actually doing my best to add value. So I don't want to keep clicking on these things because they're all about this guy who's apparently angry with me. Already know what volatility is. I'm going to try to find some good questions. I do have some prepared questions too that how can log returns be less than minus 100? I don't think you have any idea what you're talking about at this point. Ballet, I've involved for 6 years. I mean, I appreciate everybody kind of jumping in, but as always with VTS and with my live streams, we, because we are the community here, these are our live streams. It's not mine. You guys are dictating the questions and the direction we go here. No need to defend any of this. Like, I assure you that there is nothing a person could ever say that would make me not be proud of my work. It's like I told the guy, I don't know what you're trying to do here, but I am extremely proud of my body of work. That's what keeps me going every day. That's what keeps me working every day. That's why I work 80 hours a week with a smile on my face. Yeah, I like what I do, and I am definitely helping people. So I don't know who you're trying to hurt here, but it ain't me. I hate to be the bearer of bad news, but this is not reflecting badly on me. Why wouldn't you start a fund and manage people's money instead of an alerts program? This is actually a legitimate good question, and it's a gripe that I get from people. And so what I've actually done, I have 2 YouTube channels. I don't know if you're aware of that. A lot of people don't know that I have a clips channel. This is essentially where I will just dump anything that's not directly volatility or options related. I'll just dump them over here to the clips channel. But some of these are great. Some of these, like especially when I'm actually breaking down strategies, like this one here, for example. This is, people don't know I have a clips channel, but this is a good one to watch. Straddle options. I basically went through how to do an earnings trade. But the reason I bring this up is one of these, let me find it for you. I actually talked about your exact question. Here it is. Fund manager versus subscription. I guess nobody else cares, right? Some of these get some views, some of them don't. My clips channel, I think, only has 800 subscribers. But in this video, I broke down investing other people's money, all the reasons why I do what I do. I don't know if it's worth going through it again, but let me just do a super, super fast version. So, of course, the first reason, the number one obvious reason is I make money doing what I do. My time is valuable. My expertise and my knowledge is valuable, and people pay money for that. So let's just put the money thing aside. Why would I do it a subscription model versus being an asset manager? Because like I said, in Canada, I am a fully certified portfolio manager. I have all the things. I could launch my own RIA anytime I want. Why don't I do that? Well, number one, as I said, we have members from 68 countries worldwide. I can help way more people doing what I do now. If you're an asset manager in a city, Chicago, New York, Vancouver, for example, wherever it is, you typically, legally speaking, you can only manage money for people in your jurisdiction, unless it's some type of global fund. But typically, your asset managers, your RIAs, you're not managing money for people outside your country. But more specifically, it's oftentimes even pretty close to your city, right? People who are asset managers in New York, they don't often do a whole lot of work to get clients from California. There's plenty of asset managers over there. So it tends to be quite local. I can help everybody in the world follow my portfolio that performs way better than the 99% of the investment world that are giving you these prepared products and pie charts and silly things like that. So that's one really beneficial thing, don't you think? That as long as you're taking the trades in your own account and I'm not representing myself as an asset manager, then I can help whoever I want and whoever needs help. That makes me feel good, that I'm proud of my body of work, that, look, anybody from any country can follow and join the VTS community. That's a great reason. The second reason is that the way that I do it now, it allows me to focus on the actual portfolio. Because like I said, this is 100% of my money. This is what I do. So I only focus on building my own wealth, my own long-term wealth. That's all I do. Day in and day out, I'm basically just crunching numbers and building strategies and perfecting everything. I'm not doing a whole lot of marketing. All I'm doing, my marketing gets done for me, right? I don't have to do any marketing. I've never done a sales call. I've never done any of those direct things, because all I do is I create something cool that I put my own money into, and then I make a video or a live stream about it, and I tell people about it. And I say, look, you're an adult. Do your due diligence, assess what I'm doing. If it's interesting to you, you can do it as long as you take the trade yourself in your own account. Then it doesn't matter if you live in Tokyo or Sweden. It doesn't matter. So that's another reason. Third reason is I live worldwide, right? I live in Vancouver, Taiwan, Dubai. I'm a digital nomad. I've traveled the world for as long as, right when I left university, basically. I was a professional golfer, for anybody who doesn't know. I played pro golf, and it was just part of my life, traveling the world. I saw many, many different countries. I retired from golf when I was 30 years old. That was 2005. And for the last 17, 18 years, I've been investing. But I continued to live in different countries around the world. I don't want to just set up shop in Vancouver and just park in. Nothing wrong with Vancouver, don't get me wrong. It's a beautiful city. I used to live right on the ocean. It was great. But I also like seeing the rest of the world as well. So there's a few reasons why I do that. It's, it might be hard for people to understand because, again, getting back to the other criticisms I was getting, blanket statements, they're typically not that far off the truth in most cases. Like the reason people think, oh, if this guy was such a good trader, he would start a fund, because most people would, to be honest. So a blanket statement like that has some truth to it. But there are also exceptions, and I'm certainly one of them. I could, if I wanted, go back to Vancouver and do that. I'm not going to say it's impossible that in the future I wouldn't do that, but it's not likely. I love what I do. I love traveling around the world, and I love helping everybody from any jurisdiction they want as long as they take the trades themselves. So I like it. Subscription suits me just fine, but I don't criticize what anybody else's choice is. Maybe you're a person, you live in Chicago, and you just want to set up there, and then it makes perfect sense to get registered, build up your social media following, do your marketing, go to all the conferences, and do the standard financial industry stuff and do it that way. There's nothing wrong with that either. Okay. I entered your most recent broken wing butterflies, one for a credit of 10 cents. So that one would have been the recent one, I believe, and the other for a debit of 35 using your 30-second rule. Do you rules of thumb for butterfly entry pricing? So the difference, I didn't do screen share. Sometimes I make that mistake. So the difference between the credit that we are receiving, so let's just say the VXX, for example, this mock-up trade that I gave you, 37 or 27 cent debit in this case. But there will be times when we open these for a credit. There will be times when it's close to zero. Essentially, all I'm trying to do is just make sure that it's a broken wing butterfly. Because again, the majority of my portfolio is going to do just fine if the volatility ETPs decay too far. Like if it goes down, we usually start when it's about here. If it goes down 10 or 15%, yeah, this one individual trade is going to lose money. But the rest of my portfolio is 2 times leveraged equities. I'm going to be big smile on my face if that happens. So that's why I set it up this way specifically. If you were a person who has a net portfolio that has exposure to the short side of the market, then this would no longer make sense for you. Because let's say you did have a portfolio that was net exposed to you want to see the markets go down a little bit. Well, in that case, your danger side is different than mine. And you wouldn't want to have strategies that lose a bunch of money over here or over here because your portfolio has a different skew than mine. I actually share in every one of our emails our portfolio beta factor, for example. So this is the 5 strategies, 20% allocation, and this is what we're currently in. So we currently, across the board in our strategies, roughly have a beta to the S&P of about 1.17, which means that if the market, this is not a day-to-day, it doesn't track one-to-one, so don't think that. It's more of a longer sort of medium-term measure. But in general, if the market goes up 1%, I can expect my portfolio to outperform a little bit. There are times when we have a net beta exposure because I'm long and short. I'm a tactical investor. I have no problem going into cash. I have no problem going into cash and gold. I have no problem going long volatility. If the market's melting down and volatility is spiking, there's no chance I'm just going to hold on for the ride with my stocks. So there are times when our beta factor gets very strong. It could be 1.6, 1.5, or it could be negative. But as far as the butterfly pricing with your question, it's going to be different every time. The credit debit doesn't necessarily matter. It's mostly about the structure. As far as actual trading goes, yes, always use the 30-second rule. The 30-second rule is essentially how I ensure that I'm getting good prices because we're buying spreads here. Iron Condors has 4 legs. You want to make sure that you get good pricing. So for this one here, what I would do is I would enter the trade. So it's Sunday night here. This is not going to work. But what I would do is I can actually do any trade I want. This butterfly, assume that I adjusted all the strikes. I would just go ahead and send this, right? At what I call the mid price. Okay, of course it's rejected. So I would send it at slightly better. So if I'm doing a debit spread, of course you're paying a credit or you're paying a debit, you want to pay less. So I would go maybe 1 or 2 pennies below the mid and I would send it. And what'll happen in the working orders, it'll be up here and I will be able to see how close I am. And then I'll wait 30 seconds, right? It's a computer. I don't have to wait all day, but I'll wait 30 seconds. And then if it doesn't go, I'll just go and you can actually click. I wish it was live trading so I could show you, but I would just click adjust and I would adjust it 1 penny, send it again, wait 30 seconds. If it doesn't go through, send it again, 1 penny up. If you're doing credit spreads, iron condors, right? Remember with an iron condor, you're selling for a credit. You want to get more than the more the better, right? So I would start 1 or 2 pennies above the mid price. Every 30 seconds, drop it a penny. Typically, it only takes 1 or 2 tries. There's very rarely that I have to do 3 or 4, but that's how you're going to assure that you're getting good prices. You don't ever use market orders with option trading. And you just want to do limit orders and you want to try to do a little better because Thinkorswim, that software that we use for our live stream account, it's very good. The pricing is extremely accurate. Now, my long-term portfolio is at Interactive Brokers, and Interactive Brokers is what I would say decent, but sometimes when you're looking at the mid price, it's not actually the mid price. That's just a front-end software thing. And I have heard from people, I've never tried them, so I don't know, but Schwab, Fidelity, some of the other ones can actually be off by a few pennies. So that's why you always want to look at whatever it's saying the mid price is and try to do a little bit better. So debit spreads, don't be afraid to start 2 or 3 cents below, and credit spreads, feel free to start a little bit higher. Take a little bit of extra time, a couple of minutes, right? VTS only takes, I mean, maximum 5 minutes a day to follow my portfolio. I don't think it's too much to ask to just spend an extra minute to try to get good execution prices with your option trading. That's what I would suggest you do. Always use the 30-second rule. And look, if this is going to be a shameless plug, this is going to drive our friend Balapor crazy when I do this, but hey, it's my live stream, so I'm going to point it out. I will screen share in a second. I'm just putting my password in. But don't forget that anybody who signs up for the VTS community, this is why it's going to sound like a shameless plug, but I have a point. Hang in there. There is a full Iron Condor mini course that I just prepared. I just give it out to the VTS subscribers. It's a pretty long course. Right now, I think there's 23 videos here. One of the videos is the 30-second rule. So this is trade 9 execution. I go through one of these. All of these videos are like, 10, 15 minutes. And I'll just go through and actually do a trade execution here. And I go through multiple examples of buying credits or selling credit spreads, buying debit spreads. So if you want to see how that's done, plus the full 25-part Iron Condor course, all you have to do to get that is just subscribe for the free 2-week trial to VTS. You don't even have to stick around. You just get the 2-week trial. If you do it quick enough, I suppose if you're really trying to avoid that payment and you really don't like me and you're like my friend Balapor here who thinks I'm a scammer and a fraud, well, at the very least, you have 2 weeks to watch the course before you cancel. And if you do forget to cancel, of course, don't worry. I give full refunds to everybody, no questions asked. But yeah, there is an Iron Condors course available for anybody who wants it. This is just going to be a comment generally speaking, but I only have I have 3 rules essentially. No swearing, none of that. It's not because I'm a prude. I mean, you say whatever you want to me. You can insult me, whatever you want. You can say whatever you want. That's fine. It's never going to get you booted from my live streams. So, but the reason the no swearing is that it will be flagged by YouTube and it will actually affect certain things. So don't do that. That's one of the rules. The second rule is don't ever insult somebody else, right? I want my live stream to be a place where people can come and feel free to disagree with me and feel free to insult me directly. But once you start insulting other people, that's when I'm going to shut it down and I'm going to say, look, you've abused your privilege and you can't come back. And the third rule is don't do third-party links. And it's not because I'm not interested in your work specifically. If you want to email me directly, I'll check it out. And if it's awesome, maybe I'll give you a plug. I'm always shouting people out, people I like on Twitter, other people in this sort of similar business, volatility traders. I am not, I'm not claiming that I'm the greatest thing out there. There's plenty of other people doing good work, but don't share third-party links because a lot of them are scam links and they lead to, some hacking situations. So I will always get rid of that. But outside of those 3 rules, like this guy's free to say whatever he wants to me. I would ask you politely, don't insult anybody else because that will get you banned. But feel free to rip into me all you want. You can say whatever you want. And everybody in the VTS community knows that they can disagree with me anytime they want. And I always explain my point of view and then to each their own. It doesn't bother me. I'm confident in what I do, but I'm not arrogant enough to think that I've got all the answers and I know everything. I mean, there's a few times people have corrected me on a few things and it's cool. Thank you. I didn't know that. It's useful information. But the only thing is, like, it sucks. The whole chat is, the whole chat's on fire with this guy. I appreciate people defending me, but again, man, if you only knew how proud I was of my work, you would know this is a dead end. When's the last time I golfed? All right, finally a real question. I don't golf much anymore. I retired in 2005, and to be honest, for the first 5 years, I didn't golf hardly at all. And then I went through a period right around 2010, 2011, where I was kind of playing once a week, which was kind of fun. I had a good group of guys here in Taiwan. We were playing golf about once a week. Since then, honestly, the last 10 years, I've probably only played 30 games over a 10-year period. So we're talking about quite literally 2 to 3 per year. But my wife has just started golfing just in the last year. She's actually played about 50 times. Actually, I think 60 times. She's very into golf, way more than me. She's played 10 times more than me. But because of her getting into golf now I'm starting to feel it as well. So I've joined the Dubai, the Emirates Golf Club in Dubai, and it's really cool, and everything in Dubai is amazing, personally. I don't want to sound like a Dubai tourist employee here, but Dubai is a phenomenal place. But the golf course that I joined, Emirates Golf Club, it is expensive, but you get access to 5 different golf courses, which is awesome. 3 different locations, and then 2 of them have 18 holes at each of them, or 36 holes. So no shortage of opportunity to golf. I work 80 hours a week on my investing. I hang out with the wife every chance I get. I like to run. I run about 4 marathons a month. Not the equivalent of 4 marathons. I try to get 168 kilometers a month on the road. I go to the gym a couple times a week. So golf, it's there. It's kind of hanging out there, and my wife plays a lot now, so who knows? But right now I am a workaholic, and I do prefer to just grind out this VTS stuff. It might look boring for people. Like, it might look like, oh my God, how do you do this? But when I see this is probably one of the reasons why I share so much data and numbers and geeky stuff with people, is because I love this stuff. Even after 17 years in the volatility trading business, I still just love it. So, but maybe I'd have to force myself to golf more. I think if I played once a week, I'd be happy. Yeah, I can actually show you. This might be actually kind of funny. Sometimes when you say things publicly, right, make it known. And especially since I do have a community that follows me. Again, I'll screen share in a second. I'm loading up a password-restricted website. But this is just in a general comment for a lot of you. If you're ever trying to do something or achieve something, one of the good things that you can actually do is just make it known. Just post it on Twitter. Tell your family, tell your friends what you're up to. And one of my goals is to get back to some resemblance of a reasonable golfer. So, come on, where is this? I'm showing you my handicap. This is going to be a little bit embarrassing because I did play professional golf for a while. So let me screen share this. Yeah, you want to see my handicap? So this is my Emirates Golf Club ID. I have played 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I played 12 rounds of golf since I joined the club. And I joined about a year ago. So I've played 12 times in the last year. And so, again, like I said, make it known. I'm trying to get back to a reasonable level of golf. Reasonable for me. Some people might look at this and think it's pretty good. Handicap of minus 2.4. But when I was playing professional golf, my handicap was, we say plus in golf. I don't know why they say minus here, but it actually should say plus, which means negative. But my handicap was about, plus 5, plus 6 when I was playing pro. So to be at plus 2.4 right now, it's struggling a little bit, but I'd like to get to plus 4. So make it known. I'm telling my community, I am going to play once a week. I'm going to practice, and I'm going to try my very best to get back to something plus 3, plus 4, pretty solid handicap. I'll never get back to the plus 6 that I was, in 15, 20 years ago, but we're trying. Oh, my wife, people don't know you rejected Wall Street jobs just to help more people in need. Yeah, I don't think I need to go into that too specifically, but I don't think it's overly surprising. I'm not saying something like, hey, look at me, but I think most people who follow my work would understand the appeal of some of these large funds and these big RIA people out there that would look at what I do and think that it's attractive, both on the performance side, both the fact that I clearly know what I'm doing, but also the fact that I do sit here on video and answer live questions. That's not easy. I don't know if you've ever tried it, but we've done hundreds of hours of totally live questions from an open community. Give it a try sometime. It's not as easy. So yes, I get offers all the time. I had one, I almost took the wife to New York. There was one very, very good offer. I'm not going to tell you how much money it was for because it was a lot, but yeah, I get offers all the time, but I love what I do. I absolutely love what I do, and I wouldn't change it for anything. It's the ultimate win-win. Don't ever listen to anybody online that tells you that it's just completely altruistic and they don't care about money and, oh, this is entirely for you. I'm just such an awesome person and I'm helping everybody. Just shut up. You're making money doing what you do. So the only thing any of us can do, because all of us, or at least for legit people, like my time is valuable. So if people say, hey, how come you charge for your services? I charge for my services because I value my own time. If I don't value my own time, who will in this world? If I don't value myself, if somebody else is out there saying, hey, I give everything for free, cool. If you don't value your time, nobody else will. So you do you, but that doesn't seem right to me. I do an enormous amount of work. I mean, added up, 17 years of 10 hours a day. It's a lot of work. But yeah, the best that any of us can do, because this is a world where we have to work and make money, it has to be a win-win. So I make money, but I also want to add as much value to other people's lives so that they can make money. That's the win-win. And that's why I'm proud of what I do. I'm not proud of what I do because I make a lot of money. It's also the other side of it. But don't ever let somebody convince you that they're, you see this sometimes online where people try to pretend that they're just super generous and, oh, it's nothing to do with the money. Come on. We do make a little bit of money as well. So I'm sure all of you can see it in the chat section. This guy is going in, so I'm just going to let him do his thing. And I think I'm going to go to the prepared questions because that's kind of a mess, that chat section. So don't forget that in our live streams, you can also, there's my good old handicap. Like I said, I made it public and made it known. I'm not happy being minus 2.4, so I will give regular updates, and I want you in the community to hold me accountable to this. So don't forget that you can go to the community section on the YouTube channel. If you go to community, and then every week I will post a thread. And I didn't really alert anybody to it this week because I wanted to do a live chat only, but there were a couple of questions submitted, so we can actually go through these. I think this one I actually answered live. General guide. This is where he went, different trades have different credits or debits, and you use the 30-second rule. So definitely do that. This question's a little bit interesting. I just read this before I went live. What is so better about the M4 to M7 ETPs compared to the M1 to M2? I haven't been trading back when they were available and don't quite understand the benefits of them. So a little bit of a backstory on this one. What he's essentially getting at is this week, it's a reasonably exciting announcement for us volatility geeks, but I believe on Wednesday, I don't know the date. I'm not going to trade it for several months probably till it really ramps up, but there is a new product being launched called ZIVB. And what it is, if any of you have been trading for a long period of time, back in 2012, when I launched VTS, we had one strategy that was using the XIV. Of course, back then, that was the big dog back then. So we're using XIV and VXX as a long-short pair. And then one of the other strategies was for people who prefer a little bit more safety, a little bit better risk management, they could replace it with the ZIV VXZ combo. And what those are is the M4 to M7 VIX futures products. So if you go to our good old VIX Central here, you can see the VIX futures. All of the volatility ETPs that you've probably heard of and that you trade, you're talking everything, VXX, VIXY, UVXY, SVXY at a minus 0.5 times inverse, but all of them are trading here, the front 2 months. The new UVIX, again, front 2 months. The old TVIX that was delisted, that was front 2 months. There was a product called ZIV that trades the M4 to the M7. And one of the reasons why this product is actually appealing to certain people, like I said, who want a little bit better risk management, is you can imagine that the slope of the VIX futures out at M4 to M7, that's month 4 to month 7. Each one of these dots is an individual month on the VIX futures curve. The front 2 months are steeper. They move quicker. They can go into stronger contango and steeper backwardation, and it can happen much quicker. The product that trades out here, the old ZIV, was more stable. Now, it didn't return as much as the old XIV as far as the inverse products, and the old the SVXY right now used to be a minus 1 times inverse. It used to be the same thing as XIV. So they move faster, but they're also a little bit more dangerous. So if you imagine what's happening when you're trading these products, remember, we are trying to avoid the risk, right? We're trying to manage risk. And so this is the M1, M2 VIX futures. And you can see what we're looking at here, that they move quickly. Now, this isn't very scientific. I read your question maybe 20 minutes before I went live. Sorry, I didn't prepare it exactly. So you're going to have to eyeball this, but you can see these are kind of sharp, right? The changes of direction are fairly sharp. Now let's compare that. This is the M4 to M7 futures. Hopefully, just visually, eyeballing wise, you can see that there aren't actually that many periods where it goes negative. And when it's positive, it tends to stay more or less stronger positive, and it changes direction slower. Because again, we're talking about a section of the curve. It takes longer to move that section of the curve significantly than this curve. Like this front month can move really rapidly. So you can imagine that all the products that people are trading, they are actually trading products that move quite a bit more violently than maybe the ideal risk management would allow. You can see here in the trailing 2 years, the M4 to M7 is lower. It hasn't been performing very well in the last few years. When the product launches, I'll do a full live stream about it, talking about why it may not actually be as good as it used to be. But that is the basic reason, is if you are looking for risk management. Because you have to remember that as a trader, specifically as a volatility trader, your job is to manage risk. Like I said, any dumb luck strategy is going to have periods where it's doing well. If you're just net long equities, net short vol, you don't have to worry. You're going to have 70% of the market periods, you're going to be doing just fine. You don't brag about those periods. It is just a reflection of the market being advantageous. But you have to remember that your job is risk management, because we're dealing with products that can spike violently. And as I always say, losses are more costly to a fund than gains are beneficial. So when you're dealing with something like a front month product, like say the VXX or a short UVXY, you're dealing with something that can have a 90 to 95% drawdown. If you don't have good risk management in your strategy, you could lose 50%, 60%. And remember, if you lose 50% and then make 50%, if that's the type of trader you are, big wins, big losses, then you're not making any ground, right? This is very elementary to go through, but it is important. Remember, let's say you start with $10,000 and you make 50% because you're a go all in type of trader. Well, now you're at 15,000 and then you lose 50%. You're not back to break even. We don't do plus 50, minus 50. Oh, it's a wash. Let's better luck next year. No, your 15,000 goes to 7,500 and you're down 25%. And the same thing exactly in reverse. If you start with 10 and you lose 50 on your first year because you're taking big chances and you're playing with the front month VIX futures and you got caught in a spike you didn't expect, down 50, now you're at 5,000. And then you make 50% the next year because you're going for it, and suddenly, after the COVID spike, the government throws trillions of dollars and it recovers. Great, you made 50%. Now you're at 7,500. You're not back to break even. Losses are crushing to a long-term portfolio. This is just a fact. It's a mathematical fact. Whereas if you're playing the ZIV, the M4 to M7 futures, maybe your risk management will be better. So it's true that your return might be lower, but your risk management might be better. If you're the type of trader that when you're trading volatility, you are in the range of making or losing 20 to 25% rather than 50%, long-term, you're going to have more money. Even though you're making half as much on your wins, as long as you're losing half as much on your losses, you are better off long-term. You will have more money long-term. People don't realize this. Everybody on Twitter is chasing big wins. Everybody on Twitter is constantly trying to show everybody how huge their outperformance is. You very rarely see people talking about, hey, I've never had a 50% drawdown. Whereas, even the stock market has had that, 56% in the great, the financial crisis. So yeah, you can see basically if you're dealing in this range, the 20%, it only takes 25% gain to recover from a 20% loss. But once you start going down into this range, and some people who trade volatility on the short side, it's not uncommon for them to be dipping into this range. So you'll see them on Twitter talking about how they've been making money for a whole year straight. And oh my God, this is just easy money, ATM machine. Yeah, you're not telling everybody that 3 years ago you lost 70% of your money in a drawdown. You need 233% subsequent just to get back to break even. You're not telling anybody that, right? So wins don't always recover the losses. Sometimes it takes 3 or 4 times as much, and it could take several years to recover from one mistake. So again, getting back to the original question, why would somebody want to trade the M4 to M7? That could be one of the reasons. It is a slower moving product, and risk management, while it's not completely built in, it is actually there in a more manageable way. It's not going to get out of control as easily as a 1 or a 1.5 front month ETF can. Those things can get away on you really quickly. And then your emotions start to enter the picture, right? How many of you watching right now have been in a situation where you got hit with a big drawdown? You were in some type of strategy and market does something crazy and it hammers you on day one. Well, now you're down a lot, right? You should exit, right? You've breached your risk tolerance. You've gone through your parameters. You thought it would never happen. The thing that you always said, oh, that'll never happen, it happened, right? Well, what do? Some people have the discipline to just say, okay, that was a mistake, I'm out. Some people don't. Some people say, you know what, I'll just give it another day or two. It'll recover. Maybe it will, but sometimes it won't. You might be looking at those numbers and saying, well, come on, how can somebody lose 70% trading volatility, shorting volatility? Even the worst day will only take you, 35. Okay. I think, it was down 36% in the Brexit vote, something like that. The VXX, up 36%. Yeah, but that's in one day. But then you get people that are just crazy and they trade undefined options on volatility. Now you've amplified your return. So hey, if you're going to lose 36 just holding the ETF outright, you do your undefined option spreads, you might lose 50, 60, and then wait 2 or 3 more days. You never know how far it's going to go. You can, and people do quite regularly, get blown up to the tune of 70 or 80% down. And then what do we know about just the straight up mathematical equation of it? Well, it's going to take you a long time to recover from that. How long is it going to take you to make a 400% return shorting volatility? That's a long time. You could set yourself back years. So again, hopefully I've made my point. Hopefully I've thoroughly scared everybody onto joining my team of risk management first and foremost. Add profit later on. First of all, build strategies that manage risk effectively. That, look, if it gets away from all of us, right? I didn't anticipate 2022 any better than most other people did either. But things always get away from you, but you have to keep it within reason and risk management first, always. So the ZIV has a place, but make sure you stay tuned to my live streams. When that thing launches, I will go through in much more detail of why it has been lacking the last few years. It certainly from 2004, it launched in, I believe, November 29th, 2010. But we can back test it back to March 26, 2004, when the VIX futures launched. And there's no doubt from 2004 right up until about 2018, Feb 5th, Volpocalypse, the ZIV was a better behaving product for sure. And traders would have made more money shorting vol with the ZIV than they would have trying to trade the faster moving products. In the last 5 years, that may not be the case. I will try to make a case for the SVXY now being the leading best product to trade volatility as far as the ETFs go. I still like options. I still like defined risk options. But if you're trading the ETFs, there is a strong case to be made that the 0.5 times leveraged SVXY is now the best product, better than the old ZIV was. But data, right? I'll present the numbers. You can listen to me or not. Our friend Balapor here, he can come back and he can watch the live stream and hopefully he can have his opinions. Don't litter my live stream with crap like that because it just makes me go into the prepared questions. So let's see what else is here. This one, I haven't seen this one yet. This is a long one. So maybe this will be the last one and then we'll see if there's more in the chat. So I just pulled up the VIX March 23rd put contract. Okay. If I had sold this contract when VIX was low, 19 to 20, back in early December, there have been a number of vol spikes since then that took VIX up to 24, 26 on a number of occasions, yet the put did not get any cheaper. Okay, that's what I would expect. And despite the passage of time, is this the effect of the VIX term structure contango roll as the VIX futures gravitate to spot as expiration approaches? It actually makes the put more expensive because it makes the put go deeper in the money. If so, it seems like selling puts is a headwind if one plays in the front month. Okay, long question. So I'm a little confused. Okay, no, I get it. So essentially, I think you're confusing two things. You're confusing the roll yield with the VIX future, the volatility ETPs themselves. I don't know what you're asking here, to be honest. This is too long. VIX is up 24 to 26. I mean, obviously, when you're selling options and you're selling put options, volatility spikes. That's going to increase the value of what you're trading, right? It's just the Vega factor. This is one thing that I have a video that actually triggered a lot of people, where I basically showed some data where if the VIX index gets super high, a lot of times people think that they should be buying the put options to, of course, ride that volatility back down. Well, the problem is that the Vega is so high that when you're entering that trade, you're paying a fortune for it. And so if the VIX is at 75 and you buy a 20 put option for, say, 5 months out, and it actually gets to 20, a lot of people think, wow, it went from 75 to 20. I called it. I nailed it. I should make a fortune. They actually find out they don't make anything at all because you paid so much for the put option that it's basically the same price as it's riding down, right? Because the key to option trading is not getting the direction right. This is oftentimes one of the pitfalls that people fall into, is you're not actually trying to predict direction. What you're really doing in a nutshell is you're trying to sell things when they're expensive and buy things when they're cheap, right? That's what you're doing. Because with options, there's many variables. With stocks, it's direction only. It's binary, right? Long, you want the stock market to go up if you're holding stocks. Options isn't like that. There's price, there's volatility, there's time, there's all these factors. And so it's much more complicated than just getting direction right. So like you said, if you were to do something when the VIX was low and then the VIX spikes, well, price-wise, you might think, oh, I'm doing great, right? But you're not accounting for all the other variables that these are publicly traded, open markets, right? They're freely traded markets. There's a long and a short. There's two sides of the trade. People know these things, right? You have to assume that people know the pricing. It's not as simple as just, if I pick the right direction. It's an open market that is going to be pricing that as volatility goes up, the pricing gets more expensive. So you would not expect the puts to be just doing fantastic all the time. It will depend on how all the variables move in relation to each other. Now, there are times that if it happens quick enough, then you can actually get ahead of that Vega that you paid the big headwind for, and it might actually pay off long term. But if it happens on the relative time frame that the open free market determines as most likely, yeah, you're not going to make anything on that. So buy things that are cheap, sell things that are expensive. And I think that's probably where you're going wrong, is that the pricing changed on you because a VIX of 25 is different than a VIX of 19. Even though the VIX of 19 isn't low right now, long-term historically, that's not really actually considered that low. It very regularly trades in the 11, 12, 13 range. But recently, in the last 2 years, 19 VIX is low. So yeah, you were selling your put option that, wasn't probably paying you very much. And then when it spikes up, it's going to go up with it, right? So that's what happened. Probably got the speed wrong. All right, let's go back to the chat. See if this guy's done. Going long options can have high returns. Any chance you may create a strategy in which that may work well and certain criteria are met? Well, I often talk about this, how the typical online, if you listen to the standard Twitter option trader, they'll tell you that, oh, it's short only, just, only an idiot buys long volatility, just the smart money is always the short vol side of the trade. That's not true at all. It's like I said, you buy things that are cheap, sell things that are expensive. There's plenty of times when going long volatility is the right play. So I'll give you a few examples. And if you want to see a more detailed thing, like I said, I've got a Clips channel. My earnings strategy, for example, I actually do long straddle options, right? It's a long volatility strategy where roughly, 14, let's say, call it 14 days in advance of an earnings announcement for a stock that I know well, the best thing to do is to buy a long straddle because we know that volatility will rise into that unknown event. And then, of course, because we also know that as soon as the event comes out, good, bad, or ugly news, it doesn't really matter. There's going to be volatility crush on the other side as soon as the information is disseminated. So, of course, you're going to want to sell your long straddle before the earnings is announced. So, buy a long straddle 14 days in advance. Hopefully, you're going to ride a little bit of the volatility upwards. You get a double good hit if the price actually fluctuates quite a bit in the lead up of the 2 weeks. That's, higher volatility and price movement. That's great. Make a lot of money, but sell it on earnings day. Get out of the trade with a gain or loss. That's a long volatility strategy. Another time that we go long volatility is, of course, in our tactical portfolio. We've got positions where, in the strategic tail risk, if my volatility barometer is in the high, above 80%, that is the time to go long volatility, right? Shorting vol, being the contrarian, thinking it's going to come back down. Yeah, sometimes it does. But actually, I think in this email, Clearly, this is not good. This is where that 92% drawdown happened. This is when the VIX gets to 24 or above. A lot of people think that when the VIX gets to those high levels, that's when you should short vol. But yeah, I was just confirming that that's the right one. I did a short last week talking about this exact thing. A lot of people think when volatility gets really high, they're supposed to short vol. That's actually opposite. You're better off going long vol when volatility's, the markets are melting down. So yeah, long story short, I have plenty of times when I go long volatility, that, long calendar options, essentially. When volatility gets really low, as long as you're doing a long-term calendar, it basically acts as a long vega position or, slightly long vega position. So we'll trade iron condors when the volatility is mid to high, and we'll trade calendars, which are more of a long vol bias when volatility is low. If you want to succeed at trading, you have to understand that markets move both ways, that volatility can be bought and sold, and, everything has two sides to it. So these blanket statements that, only an idiot buys long vol, like everybody who's smart is short vol. Nope, not true. It's the same thing with people who say, stocks go up all the time. You should only just buy and hold long stocks. Nope, that's silly. We know, historically speaking, there's some very simple ways that you can filter for the times you should not be holding the stock market. Not overly difficult to do a very basic volatility targeting and realize that if volatility is in the 70th percentile or above, what are you doing holding stocks? That's just, historically speaking, that's just not a smart play, right? These are basic things. There's two sides to every market. So yeah, we do use long volatility. What happens if UVXY turns zero, goes to zero? Because I showed you that chart where it is diabolically trending towards zero. Is that what you mean? If I missed it in the chat, ask a follow-up question. But, oh, sorry, I'm not showing. You're looking at my dumb face again. This chart here I showed, are you talking about if it goes to zero? So, of course, this thing is gone from 17 million down to less than $5. So it's natural to assume that this thing is eventually going to go to zero. But what ends up happening, of course, is that they're just going to keep doing reverse splits. So they're eventually in the next, I would hope, in the next little while, they're going to do a reverse split at a 1 to 10. And the price of UVXY is going to go from 398, hopefully up to 39.80. Right? Do a 1 to 10 reverse split, get this thing back up to a reasonable number. And then a year later, it'll decay back down to something around $5 and we'll rinse, repeat over and over. That's what's happening with these products. They are insurance products. This is not diabolical. It's not manipulated. It's not, nobody's out to get you or take your money. Some people think that. Nope, it's just simply that these are insurance products. That's exactly what a, put option on the S&P 500 looks like. That's exactly what your car insurance looks like. If you plotted it on a graph, it would look like the UVXY. The vast majority of the time, you're paying money that you don't ever actually need. And then occasionally you get that big spike. That's what insurance is, right? Fire insurance is no different than the UVXY. It's not expected to be a consistently winning strategy. It's only really there for those giant spikes. But it is never going to go to zero. Rest assured, it's doing fine. It makes plenty of money for the issuing bank, and they will just continue to reverse split, take it up, ride it down, take it up. It serves its purpose, right? Some people who have very well risk-managed strategies can make money shorting it. Some people who have to use it for some, leveraged convexity hedging, they can also use it on the long side. It has its purpose on both ends. So it'll probably always be here. It's fine. It's a good product. All right. You always mentioned how your performance graphs are based on live signals sent to clients. Why do you have a graph for Iron Condor for entire 2022 when it was only started in August 2022 for us? It was launched in January 2012. The only reason is that there was a period where, if you remember, I believe it was March of 2019 maybe, where I took a couple of the option strategies out of the VTS portfolio and I put them in the VTS options portfolio. And we used to have, from 2012 to 2019, we only had the VTS service. And so the Iron Condor strategy was actually one of the originals. I'll just, let me try to, I can't pull it. Oh yeah, I can. I did an article on the website. I can't pull up a folder on my computer, but I always, like I said, I've done 1,000 blog articles. There's always an article for everything. So when I show the performance, you have to understand that this was an original strategy at VTS. It launched live with paying subscribers all the way back in January of 2012. It launched with our tactical volatility, our tactical balanced, and then there was a couple sort of like optional, if you want better risk management, like I said, you could use the ZIV instead of XIV. But this is an original strategy, and it's been here the entire time. It's just right about here-ish. I was getting a lot of questions, comments from people talking about how they're not really interested in options. How come I'm not talking about the actual tactical strategies more? What's all this option crap you're mentioning? So what we did is we broke it off right about there, and we put this strategy into the VTS options strategy. And we did that for a few years, and it was very popular. Had over 600 subscribers on the VTS options side, and it was great. But then recently, I don't even know how long, maybe a year ago, I just got overwhelmed with work, and I shut down the VTS options service. Temporarily, it will be back for all of you who are waiting for my option strategies. It will be back, but I had to choose between VTS and VTS options because I just got overwhelmed with work. And so that's why it came back into the main VTS portfolio. But yes, it's definitely an OG original strategy. I love Iron Condors. It's actually active long before 2012. That's just January 1st, 2012 is when I launched my business. And I only like to show performance for when I was actually had third-party people, verifying. I could show you my spreadsheets from 2008 or something, but that was just me, right? I was sharing it on a public website back then. My first website was called VIX Trader. I think it was back in 2008, later part of 2008. I did that for 3 years, sharing my results publicly. That's how this whole thing happened. It wasn't a plan. I just had a bunch of people who looked at my website and thought, oh, that's great. Can I send you a few dollars? And maybe you can just email me on the same day you send the trades. And I thought, yeah, okay, well, sure, I can do that. There's no big deal. I can just have a little email list, and anybody who wants to see my trades live, I'll just fire it off in an email. That was the birth of VTS. It wasn't something like I thought, oh, you know what, I'm going to start this business. It wasn't like that at all. I was on VixTrader.com, I was just posting my results. I was writing a few articles. I was telling people my methodology. And hey, victim of my own success, people wanted to know the trade signals. So I started accepting $50 per person, compiled an email list, and VTS was born. So that's why I go back to that specific date. January 1st, 2012 was basically when I quasi-launched. That's it. So this is the live trading performance of our Iron Condor strategy. And it's currently now, did I close my email like an idiot? I did. But it is currently part of the portfolio. Always has been, always will be. I love Iron Condors. The reason that, obviously sign up for the free trial because you're going to get the 25-part course and then do with your subscription what you please, right? It's fine. But the reason that Iron Condors are so important for people to trade and to add to their portfolio is kind of on the lines of what I said before. 70-80% of the time, most people are net long equities in some variation. Their portfolio's net long the market. And most of the time, they're going to be fine, right? It's not going to be crushing returns, but they're fine. They're going to be making money. Very few people have any exposure in their portfolio to market neutral strategies, right? They don't really have anything for that. So if the market chops around for 2 years or goes down for 2 years, they don't really have anything that can perform well. That's what Iron Condors is such a powerful strategy. In a strong bull market, Iron Condors aren't as good as a net long equities strategy. It's true, they're not. But in a choppy market or a downtrending market, they can be very good. And that 20% can add a very significant benefit to your portfolio. Not only that, hey, I've got 20% of my money that's not exposed to the market downturn. That's always good. But you've also got something that can actually add positive alpha to it. So I truly believe that everybody should have a portion of their portfolio in market neutral Iron Condors. And when I say Iron Condors, remember, I do mean in the VTS strategy, we use both Iron Condors, maybe 70% of the time. But during really low volatility, we do switch over to calendars. But it's officially called the VTS Iron Condor strategy. But we do use calendars as well. More long vega in those those low volatility periods. I'm in long trade in UVXY. Could it be delisted if it turns zero or there'll be a reverse split? So again, I covered this. It's never going to go to zero. It's always going to be just reverse split. In the event of reverse split, now I'm not trying to imply that your position is sound, right? I do not personally recommend a buy and hold long volatility position. I'm only long vol in the ETFs, maybe 3% of trading days. It's just not advised. Unless you're using it for direct hedging of a portfolio, it's just not advisable to hold something that's down 99.99999% since inception. You're going to thread that needle. You're going to just choose it at the exact right time and you're going to make money. Maybe you're a genius savant trader. I don't know. But more than likely, statistically speaking, you're just going to lose money if you're going to be holding it for any extended period of time. So I don't mean to imply that you're fine, like just keep it. But in the event of a reverse split, nothing happens. Essentially, your shares basically just adjust it. So if it's a 1 to 10, the price is going to go up 10 times. So you're going to log into your computer the next day and your price is going to be $40, but then the outstanding shares are going to be reduced by 10 and you're just going to be made zero, right? And the only slight thing that you need to be aware of is that if there's partial shares, like let's say it's 12 and it goes to whatever, you're going to be cash settled on any partial shares. But more or less, absolutely nothing happens to the value you're holding in a reverse split. You don't have to worry about that. It's just a visual thing. Prices go up, shares go down. Your net liquidation value is the same the next day. If you're option trading, you should close your options and use the new strings when the market makers provide them. But as far as your position itself, though, please understand that while you might think that you know something, like you might think that you've got a good bead on this volatility spike that's just about to happen, right? You might have reasons in your head to think that you're going to be able to call this one correctly. But just step back for a second and just ask yourself, is it rational? Is it realistic to assume that you're going to be able to choose a profitable period on something that looks like this? Honestly, let's just check all of our egos at the door, mine and yours. I have my opinions, you have yours. Let's just show this chart to somebody who doesn't ever trade and say, look, you're dealing with a product that, I can add as many zeros as you want. This thing is down. Ask somebody, is it likely that you're going to be able to make money on the long side of this just holding it? No. Just absolutely full stop no. So that means once you acknowledge that that is not a good strategy, again, unless you're using it for a high convexity hedge, which then, hey, do your thing. Make sure that you calculate that, and it's difficult to calibrate the right hedging with a UVXY trade, but if you can do it, hey, great, all the power to you. But it's just not realistic to expect that. And so many people get into these products thinking that, oh, it's obvious. Like the Fed meeting is coming up and the market's definitely going to fall apart then, or they're going to do this to interest rates, or market's been going up for so long, it's definitely going to crash any day now. And then what most of the time, 99% of the time, what they realize is, oh, markets can actually do that thing that I think they shouldn't do for much longer than I thought, right? Volatility can stay low for a lot longer than you think. Can just hang out in those low ranges. This tends to happen. There's this engine that, you can call it the gamma engine of the market, basically, where the lower volatility goes, there's a lot of reasons to think that it's going to be influenced to stay low. If for no other reason, you're talking about a lot of people just general, air quotes, volatility targeting. If volatility starts to get into those low ranges, more and more people are now available to take those equity exposed positions and maybe even ramp up a little bit of their leverage, right? So what's going to happen to a market in low volatility? It's going to have this little, kick behind it that there's no reason to exit your stock positions when volatility is low. Historically speaking, that's when you should be in stocks. That's when you should add to your stocks. So this idea that you're going to be a volatility contrarian and be able to time it successfully, I don't ever tell people, oh, you're wrong, that strategy sucks. You do you. I don't know anything about you. Maybe you're awesome at this. Maybe you're 5 for 5 in the past. I don't know. I'm just saying, statistically speaking, you're on the wrong side of the trade, my friend. Volatility right now is too low to be holding long volatility. It just is. All right. I'm doing pretty well on a couple hours sleep here. Our buddy Balapor got me fired up and gave me energy. See, you tried to take me down, and what ended up happening is you actually just kept me going. So reflects more poorly on you, my friend. All right. Is there a correlation between volume of the VXX or S&P options or VIX futures and the success rate of your predictions? Let's try to understand what you're asking here. Is there a correlation to volume? So volume on the volatility ETPs doesn't really matter. They trade based on underlying indexes. So the VXX basically tracks the VX VIX STR index, right? So volume doesn't really matter there. S&P options and VIX futures, the volume's consistent-ish, right, over time. So there's nothing to be learned there. I don't really focus on volume of any of those products, to be honest. No, I might be missing what you're trying to ask here, but no, any considerations of volume doesn't enter my equations at all. All great traders are on YouTube. A lot are. I wouldn't say all. A lot, certainly a lot, in some capacity. I would say that in general, if you have unique knowledge and you have actual real world experience that would be beneficial for other people to learn, then yeah, they're going to have a YouTube, they're going to have a podcast, they're going to have a weekly newsletter. Yeah, I think that's a safe assumption that if somebody has some public representation of their work, their body of work, I think that probably increases the probability that you're dealing with somebody who is knowledgeable and experienced and probably, to be honest, been around for a lot longer. Now, what you want to be aware of is, where did these things happen, right? Because let me give you fair warning if you're trying to avoid some of these scammers out there. What you will notice is the launch of their business and the launch of their YouTube channel is amazingly close together as far as time goes. Like, they basically just emerge in the world as this YouTuber / expert trader. You do want to be careful of people like that. What you'd rather see, and I always have to use me as an example because I'm me, right? But I'm not saying I'm the only one. There's thousands of other very exceptional traders who have many years of experience. But for me personally, I started investing in 2005, right? I traded my own capital for 7 years. I had a public website, all the articles. Like I said, people started emailing me and saying, hey, I'll throw you $50 if you give me the trades. Everybody knows my backstory. And if you're new, maybe you don't, but that's essentially how it happened. So 17 years later, I'm in a position where you're on my live stream talking things like that. But I've been here for 17 years, right? My social media experience has sort of ramped up recently because I've now got 17 years of experience, right? It's coming from a place of grinding in the trenches for over a decade. What you want to try to avoid is people who have YouTube channels who also have a business and experience of roughly the same time frame, right? There's not much you can learn about the markets in 1 to 2 years. You just can't. You have to experience them real time in multiple different environments. I traded during the 2007, Asian currency crisis, not the Great Depression, I'm not that old, the Great Financial Crisis, the flash crash in 2010, the European debt crisis in 2011, 2014 for volatility traders, you will remember well. For the stock market, I think it was only down about 7%, but for volatility traders, you will remember May of 2012. Like, that was not fun. You'll remember 2014 as well as a, midsummer, late summer. 2014 was brutal for volatility. 2015 China scare, all these things, Volpocalypse, Q4 2018. There's nothing you can learn in 2 or 3 years. So if you're following somebody's YouTube channel who's, I hate to be ageist here, but if you're following somebody who's young, look, maybe he's a genius, but just haven't seen enough market cycles to be able to add real value to the long term. You gotta give that time to develop. So I would say, yeah, like, if you're looking at all the veterans out there, and I do consider 17 years, like, I am one of the veterans in the investing space, been writing public articles about this stuff. Not to toot my own horn too much, but quite a bit of the volatility information that you've either read or watched videos on probably came from me or a handful of other people. And I shout those people out. Your Bill Lubies with VIX and more, your Vance Harwood, six-figure investing. There's not that many of us that were talking about these things going all the way back, 10 years ago. So when you see people who have amassed a multiple decade experience, yeah, you're going to start seeing them in podcasts. You're going to start seeing them on YouTube. You're going to start seeing them get a Twitter following. Yeah, absolutely, that's true. But I wouldn't say all, and like I said, I would be very careful looking at the timing of which one started first. Did the business start first, and then they filled in the trading history later, which is, to be honest, 99% of the time? Or did the experience come first, long and slow, hard fought in the trenches, and then the social media came later? Those are the people you might want to watch. So, all right. He isn't a fan of No, our buddy Balapor is not a fan of me. This is funny. But that's cool. Like I said, trust me, it's not going to take you very long before you realize that I'm on your team, my friend. I am right with you, trying to help people go to the several people who are actually going to help you, which I am not the only one. And I'm trying to steer people away from all the pitfalls that they will encounter. So, Yeah, he's new. That's it. He's new. He's not ignorant. He's not stupid. He's not any of these things. He's new. Doesn't know me yet. Give me time. Trust me. You will like me in a month. Answered. What happens if UVX turns it will be delisted? I already answered that. Okay. We'll look for the reasons later. Hopefully, I think I answered it after you were asking multiple times, but I did get you, so. You stopped VTS options in May 2020 and reintroduced iron condors in the main portfolio in August. And just want to know how you can show real data. I don't know if those dates are accurate. It seems right. I'll take your word for it. Yeah. I guess just filling it in. Like, where's that thing? Come on. I've got a lot of pages here. This is slow. I suppose you could say that this period, right? Let me try to isolate this exactly. So based on my memory, I think I stopped right about the, I can't do it. Can you, hopefully people can see it. This flat period here, I would say I'd say from right about there to right about there might not be live. Something like that. I don't know. But yeah, there is a short period there where we canceled VTS options, unfortunately. And I know a lot of people liked it. Certainly there was a lot of people following. This is another thing, like, I don't need to defend myself, but one of the things I will just politely point out is that I had over 600 subscribers following VTS options. And yeah, you can do the simple math. That's actually quite a bit of money that I was pulling in on that secondary service. We had VTS plus VTS options. And I stopped it. Does that sound like somebody who's scamming and doing this for money? Like, I stopped it just so I could provide a better product with VTS. I gave up, 20 grand a month income stream. Just gave it up. I could keep going. No problem. I could have kept going. Like, it wasn't overwhelming to the point I couldn't manage both of them and just keep collecting that extra 20 grand every month. I mean, are you, my friend Balapor, are you a person who had somebody paying you $250,000 a year and you said, no, thank you, I'm going to go focus on this service and provide that one a little bit better. And I'll circle back to that one in a few years when I have the time. Have you ever done that? Because I have. I have actually had that $250,000 going into my account and said, you know what, VTS, I'm not able to really push it forward like I wanted to. I wanted to talk more about the tactical strategies and do all those things. I think that's, it's not like an answer. I don't have to explain myself, but I don't think you've ever turned down $250,000 a year to do that. And then you're the one coming in calling everybody scammers. It doesn't really add up, but anyway. Yeah. 20K lost in 2 years ago. OB, the VIX ETFs. Hopefully you're not saying you lost 20K. I don't know. Yeah, maybe. The last 2 years has been rough. I don't know. I don't know who you're talking to there. Don't waste your time. He's still going. I don't know how to unpack all this. Well, I'm not a businessman, just a good trader. However, I'm following your advice and studying for my Series 3, then open a fund and market it. We will see how it goes. Yeah, I remember you. You've asked a few times about what should you do if you're a very good trader and you want a future in this business. And I went through what I feel would be best. And it sounds like you're well on your way. That's exactly what I would say. Don't forget, one of the things I think I told you was tracking real performance will at some point be important for you. Now, you will reach a point where, of course, in the financial industry, you will reach limitations about, how much you can share and whatnot. But it is always important to make sure that you're a good trader. And I'll take your word for it. You said you are, and I've seen you around for a long time. I know that you probably are, but before you start trying to help other people, before you start launching funds and stuff, you want to track your performance accurately and you really do want to make sure that you're a good trader. And 2-3 years through multiple different environments, it's going to give you an idea whether your performance that you're saying is good is the result of an advantageous market, or whether it is the result of you being nimble enough to change your strategies and take advantage of opportunities when they come. So, because and again, I don't mean to dance around and call you one of them. You're not, right? I definitely think you've been doing it for longer. But there are a lot of people who have certain success in certain market periods, and they falsely believe that it's because of their skill or their strategy. It's called attribution bias. We basically attribute every positive outcome to our own skill and expertise, and any negative outcome to external forces that were beyond our control. This is what oftentimes people do. So you definitely want to accurately track your performance for multiple years. For me personally, I did it for 7. I don't know if it's entirely necessary to do 7, but you definitely want to make sure that you're making money because of you and your strategies. And then from there, absolutely launch a fund, share your work, help other people. I've said before, I'm not curing cancer here. I'm not under the illusion that what I'm doing is the most important thing in the world, but helping people reach their retirement goals is a very important thing in this world. And as you know, statistically, in the asset management world, there aren't that many people who can actually do that. What ends up happening most of the time is that they're following someone who, they might have a good heart, they might mean well, but in the end, the performance kind of sucks. It underperforms a benchmark and the fees are too high. So if you can fix those problems, like I have, better performance, lower fees, yeah, we need you. We need you. And there's all the room in the world for people who are genuinely trying to help others. And I will always promote good work. I will always plug people who I think are genuinely trying to help. And I will always, in my polite Canadian way, tell people to avoid certain other things that are happening. I feel it's my duty. I've been doing this for 17 years. I have enough experience to help people navigate in this slightly less important than curing cancer business that I'm in. But don't make no mistake, getting people to the retirement finish line in a healthy position is very important work. It leads to better medical outcomes. If you have enough money to take care of both yourself and your family in retirement, this is a very valuable thing. It leads to higher quality of life, probably longer life. I'm not saying like I'm this, healer or anything, but do not, because there's so many scammers and frauds and people living in, penthouses in New York that aren't actually getting good performance, it leads people to diminish the entire purpose of what we do here. Don't let the scammers take you away from the goal. Getting to financial retirement is of the highest importance in your life. So even though it's a minefield, and even though you have to navigate all these scammers and frauds and asset managers who they do just want their percent fees and whatever, I'll just let the bank put you in a pie chart. Cool. There's minefields everywhere, but it is still worth doing your due diligence and finding the few that can help you get there. The rewards are absolutely worth it. So I hope you're one of them, my friend. There is all the room in the world for people who are trying to help others build up their wealth. Absolutely. I am ultra competitive against people who I deem not actually helping. And I'm extremely supportive of people who I deem valuable in the investing space. And as everybody should be. I know nothing about engineering, but if you're an exceptional engineer, you should be helping people in a polite way. I guess engineering might be a bad example. Medicine, or stuff like that. Law. If you see people giving terrible legal advice on Twitter and you're an exceptional lawyer, I'm not going to say it's your duty to correct them, but it would probably feel pretty good if you have a skill you acquired for 20 years that can really help people. You should probably take it upon yourself to help the world, right? A lot of things are like this, even simple things like accounting. If you're really good at accounting and you can save people a little bit of money and you really understand the tax code well, super valuable. I mean, you're not curing cancer either, but it's extremely important work to be able to help people. This is interesting. It just caught my eye. I don't want to entertain this too much anymore, but this guy's is now apparently upset with me because I don't know how to code. I guess he thinks that getting a math degree in university suddenly means it comes with a coding experience as well. It does not, unfortunately. I really do wish I could code, so I simply don't have the time to take that on. I mean, that would be something that I would definitely just outsource. There's hundreds of millions of people that have better coding experience than me. I wouldn't take that on and do it myself. You can't do everything in this world on your own. There are things that, like, I'm not going to defend myself in court. If I did pay taxes, which I don't because I live in Dubai, but if I did, I would certainly outsource that to an expert. Even though I'm not an idiot when it comes to these things, I would still outsource it. And anything to do with coding, yeah, I work 70, 80 hours a week. I don't have time to learn how to code. So I make $100K a day, by the way. If you do, that's fantastic. I don't know what you're doing here. I personally, and again, you might be the diamond in the rough, but I personally don't know a single person who I've ever met. And look, as a professional golfer who hung around a lot of very wealthy people in my life and has a circle of friends that, a lot of them have very successful businesses. I've never met anybody who makes $100,000 a day who hangs out in people's YouTube chats and makes disparaging comments. Never experienced it in my life, but like I said, maybe you're the first one. I don't know. I would say if that's even remotely close to true, you have better things to do with your time than this. This is beneath you, right? You're balling. You're out there making $100K. What are you doing here? You're losing. I mean, run the numbers. How much money have you lost today? Just being in my live chat. Get out there. Get your money. All right. It's been going for almost 2 hours. Have you ever stayed at a challenge account of any type? Have you ever started? No, I don't do those because, I could, but mine would be legit. The problem with these challenge accounts is that a lot of people don't understand the scams and the tricks that people in the industry, this fraud subscription industry, use. And one of them is the challenge. And essentially what's happening that you don't know is happening. But let's say, and they're always extremely low dollar challenges, right? So you can imagine, watch me turn 5,000 into 50,000, right? We're going to do a 3-month challenge and I'm going to show you how to do it, right? What ends up happening is they will have multiple accounts going, right? So you don't see that on your end, but they will have multiple things going behind the scenes and they'll be splicing things together like that. So, and a lot of people do these on these websites that actually track performance of strategies, and then you can directly act as a custodian for money, which is totally illegal, by the way, these auto trading services. But what they often do is they'll just open 5 of them and have 5 different exposure levels for 5 different accounts, and they'll just market the one that, statistically speaking, happened to do the best in the time, right? So there's a lot of reasons to think that these are totally stupid. The only challenge accounts these challenges you should ever pay attention to are ones with high dollar, because it's not impossible, but it's less likely that if somebody says, watch me turn 1,000 into 10,000, ignore them. That's stupid. If somebody says, watch me turn 1 million into 10 million, that might pique your interest, because there's a lot of things that having a large dollar account can weed out, right? It's the same people that show performance reports from their brokerage statement. On the front page of Thinkorswim, for example, there's a chart that shows your performance. And a lot of people show those on Twitter. What people don't seem to realize is that the money you add to your account, deposits and withdrawals, is included in that chart. So you can easily, if you start with $10,000 and you just deposit your minimum IRA contribution, $600 or something, at the end of the year, it's going to look like you made 60% profit that year. The chart's going to look insane. You're going to be up 60%. Well, all that happened is you made a 0% return and you deposited $6,000 or, whatever. Yeah, bad math, whatever it is. But that's what people are doing, right? There's many. Those are only like 3 or 4 of the ways, but there's a dozen ways people are scamming online. So honestly, it sounds counterintuitive, but people who are showing you performance, those are the red flags you need to be aware of the most, because there's a million ways you can game those pictures that people are saying are proof. It's not proof of anything. How much do you want me to make next year? What percentage do you want me to have a challenge account that I will show you from, what's the date today? From April 17th until December 31st. I make a decent income, so I could use a higher dollar amount. I actually am able to deposit quite a large amount every month. How much do you want me to make, right? Do you want to watch me turn 50,000 into 500,000? Cool, easy. I'll show you in December an account that went from 50 to 500. Now, did it come from actual trading? No, it's a real picture from a real brokerage account, and it'll look as genuine as could be, and I could use it for marketing material in the future. But all that really happened is I staggered deposits of $450,000, and I got it to look really cool. So yeah, anytime somebody is showing you something, that's when you should really be, okay, hold on a second, what's going on here? Because legit people you don't spend any time, anybody who's an actual investor with 2 decades of experience, who's really in the trenches they don't entertain these silly things like, oh, show me your brokerage account. That's for Twitter traders. That honestly, no legit people entertain those things. Jamie Dimon is not out there entertain like, oh no, bro, it's real. Trust me, I'll show you my Thinkorswim account statements. It's real. They're just like, dude, get out of here. I have 20, 30 years of showing you live what's going on. I have thousands of people investing with me. You think I care about showing you my Thinkorswim statement? I mean, so these are very, very low-hanging fruit type of things, and I would just ignore it personally. But when you see people trying to do that stuff, you have to understand they're marketing to the entry-level traders with that stuff. Anybody who's asking for or impressed by a picture of your brokerage statement on either side of that, showing it or impressed by it, chances are very good. They're quite fresh to this trading business, I would say. Math degrees are different than coding ones. Yeah, well, it needed to be said. I do have a math degree. I do not know how to code. And yes, that is normal. Now, surely I could have also done math plus coding, right? But I did math plus economics. And in neither one of those degrees did we actually do coding. It's one of these things that a lot of times people conflate skill sets. The one that gets me oftentimes is, people, this is just super off topic. I'm going to end this live stream with a little super off topics rant here, but the big question, right? What happened before the Big Bang, right? How did life on Earth get here, right? What is evolution all about? A lot of people think this is the same question. Like you'll see a scientist on a panel and you'll say, oh yeah, Big Bang? Well, you don't know how life started on Earth, or you don't know how life evolved, or you don't know what happened before the Big Bang. They think they're asking the same question. These are 3 different questions that should be answered by 3 different expertise, right? You want to talk about the Big Bang, you should ask an astrophysicist, right? If you want to talk about how life originated on Earth, you should ask a chemistry major, somebody who understands abiogenesis. If you want to understand evolution, ask an evolutionary biologist. These are 3 totally separate disciplines, right? You can't ask a physicist, oh yeah, you're so smart, how did life on Earth originate? I don't know, dude. I didn't do chemistry in school. Like, what are you talking about? It's kind of the same thing here. This guy's apparently thinks that math degrees come with coding degrees. No, they don't. Engineering doesn't come with a law degree, shockingly. But yeah. Anyway, that was a blast. Good times, good stuff. Thank you. And to my friend, where is he here? Of course, he's going to end and get a fake one from the internet. I don't know what you're talking about. I didn't follow. An ID, a fake ID, a passport. I don't know what you're talking about. But yeah, we're going to end it here. Thanks to our special friend here as well. All I would ask is that you give me a little bit of time, or just go away and make your 100K a day. I mean, that's clearly what you should be doing. Everybody in the comment section's like, this guy makes 100K a day. What is he doing here? He needs to be out there, making moves and, cash in those checks. So either do that or give me another chance. But you are welcome back next time if you would like. And for everybody else who endured that, I do apologize. One of the things that I do like, I am accountable to my performance. It's been on a public website for, 14, 15 years now. And live streams are important. To be able to sit here, week in and week out as a public-facing business with a social media presence, open to everybody in the subscription industry. The fact that I've been doing this for this long and I've only encountered 2 haters, it's actually pretty good, right? Most people who give me any time at all end up thinking, okay, maybe I disagree with this guy. Maybe I don't fully agree with his investing methods, but nobody leaves with an opinion that I'm scamming them. I'm clearly trying to help people here. So we had, what was it? A couple years ago, we had that Danger Mouse guy. I mean, OGs in the chat will remember that guy. And he came for a day and left, and he realized, you know what? Actually, I should go bark up another tree. This guy, I mean, again, you don't have to agree with everything I say, but clearly I'm not what you think I am. And then this guy. So 2 haters in the span of 11 years. That's pretty good. We'll see. If he comes back next week, maybe you ask legitimate questions, right? Let's engage in some real talk about the markets, about your investing strategies. Clearly you disagree with everything I say. I love to learn from other people. I am not an arrogant person. I do not think I'm right on everything. I'm very well researched, and when I do something, it's based on years of experience, but there's always the possibility that I could learn from other people. So yeah, next time, let's be a little bit more productive, but certainly come back. And for everybody else, of course, absolutely come back. You're awesome. I do these for you, and I will keep doing them as long as there's more than 3 people watching, we'll say. If there's only 2 people watching, I'm gonna cut it out. But if there's 3 or more, I will keep doing this for you. So thank you, everybody. It was too long today, but we did have a hater. Typically, these are about an hour. And yeah, stay tuned for next week. I will fire it up on Twitter when I'm going to do the time.